Good morning, good afternoon, or good evening, whenever you're watching this. If you're watching some replay, I hope you guys are doing well. It's our monthly mortgage update with myself, Sanjay Patel, one of the Avocado property partners. And I've got Uncle Dave, aka David Howard from AFP Wokingham, again with me. How you doing, sir?
I'm very good, Sanjay. Yourself?
Yeah, all good, all good. Very, very busy, as we're going to talk about that in just a short moment.
You more grey hairs, I say every time.
I'm getting some grey hairs too. It's all right. We'll get there.
You hide it well.
Right. So a couple of things we're going to talk about today and this morning for this monthly mortgage update. So at the end of March, usually we do these every last Friday of the month, but due to circumstances, we just had to move it to today. So today we're going to talk about the 5% deposit mortgages, the 10% deposit mortgages, what's going on with them, what's the best products for first-time buyers, interest rates as well we're going to touch on, and also remote valuations, because I know there's been a lot of those happening recently, and sort of what your thoughts are, Dave, as well. So first of all, Dave, just give us an overview from a mortgage broker's perspective. How has this month been of March?
It's been a lot busier than we expected. March was always going to be fairly frantic because the stamp duty holiday was going to end. So we thought all those tried to get crammed in. That actually got extended, so that pressure's off. But we are certainly still seeing the volumes of business increase again. All the new customers kind of dropped off when they thought we're never going to hit that stamp duty deadline. And now it's just gone absolutely crazy again. So it's busy, Sanjay. Like we said earlier, very, very busy.
Just coming back, yeah. No, I completely resonate with that at the moment. So, just on a personal note, obviously, how long have you been in as a mortgage broker? How long have you been training as a mortgage broker?
Doing this now about 7 or 8 years.
So, how does this compare to any other time in the property market in terms of how busy you are?
I've literally never known it this busy.
This is the busiest it's ever been.
Yeah, absolutely. This year, and I say year, probably from July till now, has just been literally the busiest in my career. You look at the number of mortgages we're arranging; it's double what we would have been doing this time last year. It's frantic, but we're okay. We're recruiting. We're staying on top of things. We're still all good.
That's crazy, because I actually feel the same. Like, you know, for all of the years I've been in property, I feel this is probably the busiest it's ever been in terms of activity, conversations, buyer registration. It's just been crazy. So very interesting. Just goes to show you that two people in the industry, and it's the busiest it's ever been. So you've got to be shouting at the rooftops if you want a property at the moment. That's how I'm feeling it is at the moment. Right.
You're better than me, Sanjay, but I'm finding everything snapped up just as soon as the market. So you've got to be quick, haven't you, like you say?
Well, look, the mid-range market, as I always say, the £300,000 to £500,000, 3 and 4 bedroom properties, houses, freehold, they're always going to get a lot of interest at the moment. That is a busy, busy time where people are looking to move, especially a lot of people trying to move out from apartments to houses. They want garage, driveway, parking, garden, kids, their dogs and stuff like that. So, yeah, it's been a bit crazy. So, right, I want to touch on this because there's a lot of talk around the 5% deposit mortgages. Can you just explain to people, because I know they were issuing the guidelines sort of from the 1st of April. So what's going on with this right now? And can you give us some clarity on what's happening with the 5% deposit mortgages?
So we're actually seeing a couple of aspects to this. The government have said they're going to back the lenders with guaranteeing 5% mortgages for them. So effectively, that means that whereas before, throughout the pandemic, everyone worried about housing market crashing, which isn't happening at the moment, the banks were worried about having smaller deposits because it wouldn't take much of a downturn in property values for if they had to repossess, they'd be out of pocket if they had to sell it and they didn't cover the mortgage that they had. So they were very worried about lending at 5%, 10%, even 15% was a concern. But that's now crept back up naturally to 10%, but the 5% was out of reach. So the government have said, the banks, you will lend with a 5% deposit. If you have to repossess that house and you sell it and you don't cover the debt, you make a loss on what you owe, the government will step in and pay that difference. So the government are backing the banks. They're not effectively backing the customer, but it opens up the opportunity for that customer to come in with a 5% deposit again, which is brilliant news for those with those smaller amounts of money to put down. Now, that's the government side of things. Unexpectedly, off the back of that, we've seen a couple of banks come in and say, we don't care about the government. We're doing this off our own back. We don't even need that government backing. we've just decided to come back in and offer 5% deposits again. So Accord Mortgages, have been a couple of others that have just naturally done it, and they've done it ahead of the game, because we're not expecting to see your big Halifax, Santander and NatWest until next month. Whereas these boys have stepped in now and said, we're going to do this and we're just going to do it on our own terms, as it was before, 5%. But that said, Sanjay, they're very high interest rates, and so far they're only offered on a 5-year fixed, and it's circa 4%. So tying in for 5 years at that high interest rate,
it's a lot.
There's a conversation to be had whether it's the right thing to do or not, but still, they're out there.
So if I was a first-time buyer, for example, and I was looking at, I've got a really good salary, I've got a low deposit, would you, as a mortgage broker, would you advise them? Obviously, I know it's down to personal circumstances, but would you advise them to say, yeah, take out the 95% loan-to-value mortgage whilst the interest rates are high at a 4% plus fixed rate for 5 years, rather than, I mean, is there another option?
Well, you've got the Help to Buy. Obviously, only new build, obviously only first-time buyers, whereas the 5% general is open to more than that. You've got shared ownership. I'm not a great lover of the scheme, but it's there. In my eyes, if you can really stretch yourselves to get that 10% deposit, do that all day long.
Yeah.
My worry is, and it could take ages talking about this, but I'll try and be quick, is that 5% deposit, 4% interest rate, fixed for 5 years. What happens if the housing market does come down a little bit over that 5 years? At the end of 5 years, you might be left with still a 95% loan to value, or even worse, 96, 97% loan to value. And then you're stuck. You're a mortgage prisoner. You can't remortgage. Yeah. You can't get yourself out of that deal. So you might have to talk to your bank about securing another rate, which is going to be very expensive again for another period of time. So you could really be tying yourself into a very high rate for a very long time there, because of the uncertainty in the market. But there's a place for it for the right people.
So just on a complete side note, just a thought that come to me, would you be better to, let's just say you're purchasing at 200 grand, so you need £10,000 as your 5% deposit. Would you be better in getting like a £10,000 loan out, getting yourself to 10% and then fixing in for 2 years with a lower interest rate? Would that be a better option?
It will limit your options. So most banks want any deposit that doesn't come from your own sources to be a gift. So close family, parents, siblings, grandparents, gifting money, no repayment terms, no interest in the property. Now, that's the general rule of thumb, but there are a few banks out there that will accept loans. So whether that's a loan from a family member, a loan from a bank, there are a couple out there, Santander for one, that can consider that. They will do that, but they factor those loan payments in. So let's say you got a 10 grand loan that's costing you 250 quid a month. That 250 a month is going to impact your affordability. So it might reduce the size mortgage you can get. But if you've got good incomes and actually that affordability isn't too much of a problem, you can still get the mortgage you want with that loan in place. I wouldn't say it's a good thing to do. I don't advocate getting people in a lot of debt with personal loans, but is that better than going in for a 4% for 5 years? Possibly. Like I said, it's a conversation to have.
Yeah, absolutely. Just got a couple of comments. Morning, Uncle Dave. Hi, Jamie. How you doing? Good to see you. Megan says, hi, Sanjay. Hi, Dave. Hope you are well. Hope you're doing well, Megan. If you've got any questions, please do pop them in the box below. Luke's come in with a question. Morning, Luke. 95% mortgages are at current property values. I don't see a huge benefit to the Joe public. Earnings aren't up to much and affordability multiples will need looking at. And I think to get any uptake on them. What's your thoughts on that, Dave?
I think he's dead right. I think this, I wouldn't say it's a publicity stunt, because there are people that need just the lower deposits to be able to afford to buy the property. But you still have those affordability issues. If your incomes aren't strong enough to get you 95% of the house you want on mortgage, you're not going to get it. Just because you've got a 5% deposit doesn't mean you can go and buy it whatever value you want. It's all to do with income and outgoings. And if you can get the size mortgage you want with a 5% deposit, you're one step forward, but you're still going to be charged a heavy interest rate for it.
Yeah.
So what we find a lot of the time, those with the smaller deposits, and this is not taking anything away from anyone, it's just the way of the world, generally are people on lower incomes. So they can't get the larger mortgages, and just 5% deposit isn't that much. If you can get a mortgage of 200 grand, then you might only be looking at what, 210 grand property. That's very off the top of my head, but you know, it's not a lot around this area. Some parts of the world will work.
Yeah, some parts of the world. Yeah. Right. I want to touch on the best rates and products that you've come across for first-time buyers. Let's take a typical example. 300 grand property value, had a sale agreed, a purchase price agreed at that, got a 10% deposit. What sort of the rates and the fixed years term? What have you been offering out? Like what's on there in the market at the moment that people can really benefit from and see, actually, do you know what? That sounds pretty good.
You're evil, Sanjay. You always pin me down on rates. But
I've got
the moment, as of today, the 30th of March, and I can't say what's going to happen tomorrow.
No, of course
We're looking at probably about 3%, 3.04, 3.06. I think Halifax had something around that region for a 2-year fixed at 90% loan to value. Now, I've heard a whisper that we're going to be looking at having a particular bank introduce a sub 3%. So 2.98, 2.99, something like that, which will be the first time we've seen 90% below 3% since the start of the pandemic, really, or certainly since the 90% came back. So they're all going in the right direction. 90% mortgages, yes, they're expensive, but they're coming down. And I think once the 95s are back, that's going to replace that high end of the risk, if you like, the highest risk point. So the 90s might start to come down even further then. So
interesting.
Circa 3% at the my in a nutshell.
That's not too bad at all, is it, when you think about it? Yeah, no. I mean, I remember 15, 20 years ago when my parents were paying like 14%, 13%. It's crazy. But
I think, Sanjay, we've been spoiled over the last couple of years. We saw 90% mortgages. I think the very best I can remember was about 1.79 at one point. 1.89 was very common for a couple of years. But before that, 3%, that's where it sat all day long. So we just had a bit of a price war with the banks for a few years, and it's just gone back up to where it sat for most of my career, to be honest. So it's not unusual to see them at this level at all. It's a good thing that they're back at this point, and it's a 2-year fixed. So after 2 years, hopefully we can remortgage, look at getting something much better for you.
100%. Let's just flip this around a second. So if you've got let's just say again, 300 grand purchase price, and you've got 120 or 150 grand deposit to put down, what kind of rates will you typically be looking at then?
So you're looking at a 50% loan to value there.
Yeah, 40 or 50%. Yeah.
Well, majority of banks say 60%. You'll get your best interest rates offered. There's a couple with better deals at 50, but very few. So right now, I think you're probably looking around the 1.2s for a 2-year fixed if you've got a 60% or below loan to value, which again, it's very, very cheap money to borrow that. 5-year fixes are out there for 1.38, 1.39. That's very cheap to borrow money for 5 years. Really is.
No, definitely. Cool. Right. I want to get onto the topic of remote surveys, remote valuations, as lenders call it. So this has been massively increased, obviously, since the start of the pandemic for obvious reasons. One, I think because of workflow, the banks are just obviously overworked and so busy, so they haven't got time to get out to each and every property. And two, just because it's slightly easier to do it on a laptop behind. But at the same time, is there a flip side to that? Are we seeing down valuations as the prices are increasing rapidly at the moment? So give us your take over the last sort of couple of months. How many lenders have you seen doing remote valuations on your side?
Most of them at some point or another. So they have more tendency to do remote valuations on the lower loan to values, 75%, maybe even 80% or below. The risk is less for the bank. They're more prepared to take that chance on an electronic remote val. Now, it's priced as well, Sanjay. It's much cheaper for their surveyor if they're given a free valuation to their customer to sit there and do it remotely rather than drive out and visit that property. So they're trying to drive their costs down as well. But I think they're doing it quite fairly, because if we put a valuation of let's say 500,000 on a property, if that valuation comes back as a desktop, as a remote valuation within a tolerance, I don't know what those tolerances are, let's say 10% of that, they'll probably agree it. If the valuation comes back and it doesn't affect the loan to value, so if we're applying for 60% and it doesn't put it up to 70%, it might not be what we asked for, but it's still in that loan to value bracket, they'll probably run with it. if it has a negative impact on the customer, if it's more outside than those tolerances we spoke to, they will probably then revert to a manual survey and send someone out there. Now, that's just not the stance for every bank, but I do know quite a lot of banks that will do that sort of two-prong attack there. They'll try and start with the desktop valuation. If it's just well out of what we need, or it's going to affect the interest rate we're trying to secure, they'll get their guy out. So they're trying to do what they can as effectively as possible.
Interesting. Yeah. What about down valuations? Have you seen many of those when they've been actually doing the remote valuation as well?
Yeah, I have seen them happen, and it's very hard to argue with a bank about a down valuation, but you've got more weight behind you when it's a remote val.
Yeah.
Because all they're going off is algorithms, historic valuing, prices in the area. Every property must have its own merits, and just because next door sold for X amount doesn't mean this one's worth the same. So in that situation, you can request an appeal and get somebody out there. They're hard to get through. Don't get me wrong, valuation appeal is very hard. You're questioning that surveyor's integrity, so it's hard to get over. But you can do it. But they happen. More happen on remortgages, because that's where there's no real sale process going on. There's no estate agent valuing it, and it's just the current owner thinking, I reckon my house is worth this. Let's put that in for the application. And the professional surveyor does disagree quite a lot of the time. But on purchases, I have seen some pretty big ones over the last 6 months, but they're not common, if I'm honest. Down valuation is probably not that common.
Yeah, cool. And I had a question for you. I think we spoke about this the other day. So after a mortgage offer has been issued for a buyer, is there any chance of it being pulled? I haven't really had this before. If I'm being honest, I don't think I can remember a time where I have actually had this, but it does happen. So if so, why?
Yes, the bank can pull a mortgage offer at any point before completion. At one point in my career, I saw banks literally pull their pipeline, and this was when we're talking around the recession back in the 2007 sort of time. I wasn't too heavily involved in this, but I do know that banks just pulled all their products. After the banking crisis and Northern Rock crash, they just pulled all their products. No banks had any interest rates to offer. And some went a step further and said, anything in our pipeline, we're pulling it. Don't care how through that purchase process you are, we're stopping it. That's one very extreme example. More recently, cladding, EWS1 forms. There's been a bit of a problem with fraud out there. So fraudulent surveyors signing off these EWS1 forms. So we've had mortgages offered, and then these particular surveyors have been highlighted as maybe not qualified correctly. So any form with their signature on it has been identified, and that mortgage offer has been pulled. So no fault of the customer. He didn't even know. Maybe the developer had got this done, or the estate agent had got this done. But all of a sudden, they realised it's not legitimate and pulled the mortgage offer. So they don't deem that property to have the correct certification for the cladding.
That's crazy. I've never heard that before.
No, that's happened on applications, definitely. And if they smell a rat, if they think that you've lied, if they just review your application and realise something wasn't quite as it should have been, they can pull your offer. It's unusual, Sanjay. Yeah. I've had a handful, 2, 3 since I've been doing mortgages pulled, but it's very, very unlikely to happen, but it can.
Yeah. Interesting. Cool. I just wanted to touch on buy-to-lets. I've had quite a few conversations with investors recently, and obviously how they're finding the market, because obviously prices are increasing and they're kind of getting outbidded on quite a lot of properties at the moment. And so it's always good to have the inside knowledge from an investor's mindset on how they're looking at stuff. So I've had an investor recently who said they wanted to purchase cash outright for a property. And I said to them, is that your best option as an investor in this property, or would you prefer to split the money? So if an investor was going to come to chat to you and just speak to you about, look, I've got 300 grand sitting in the bank. I want to invest in property. I was thinking about buying this property for 280 grand. What's the best option? What would is it good for investors at the moment in terms of products and to split their money?
So, yeah, and I'd always suggest they go and speak to their accountant about it as well, or a tax advisor, because there's that aspect that I can give an insight, but I'm not a professional. I can't really say too much. Like we said a moment ago, interest rates are cheap. Borrowing money can come at a very low cost at the moment. Buy-to-let rates are slightly higher, but still quite cheap. So if you could get 2 properties and borrow money at 1.5%, for example, are you going to get more of a return on the yield from that investment property? You probably are. You probably are. You've got a lot of other tax implications to consider as well. But yeah, I don't see at the moment why trying to spread your risk but and buy multiple properties is not a good idea. And when I say spread your risk, I mean, if you've got one and you don't have a tenant, you're out of pocket. You've got nothing coming in. If you've got 2, chances of both being unoccupied at the same time are slim. So you've got less of a risk to be, completely out of the income there.
Yeah.
And there's also a conversation about how you offset the mortgage interest against your tax returns. So you could actually have a tax break from having a mortgage in place. So there's a conversation to have with your accountant about that side of it as well.
Yeah, absolutely. I mean, as a landlord myself, like I always thought, the best option would be to split your money, buy multiple properties and have multiple streams of income, because the longevity, obviously, for an investor, it's a long-term thing. I don't plan on selling my investment property for the next 20 years. I've got no plans to. Otherwise, what are you in it for? It's always about the long term for me, for investors anyway. Okay, cool. Right. Last topic. So best rates for first time sellers. I'm seeing a lot of first time sellers at the moment. They're in a question, or they've got a lot of questions for me. Should I port my mortgage over? I'm in a 2-year fix. I'm only a year in, but they're just so motivated to move because of the lifestyle shift that everyone's been through over the last year. They just really want to get out, and they don't know whether to port their mortgage, whether to pay the early repayment fee and get out and start a new mortgage. It's a very difficult grey area for them at the moment. And being a first-time seller, not a first-time buyer, they're very cautious of what to do moving forward. So I'm always in the mind to say, look, first thing you need to do is get your finances sorted. Make sure you know what you can afford, what you can't, and then you can start moving forward. So have you had a lot of those come through at the moment? I'm assuming you have.
Loads, Sanjay, absolutely loads. It's more than ever before, like we said earlier. A lot of people think first-time buyers are the guys that are naive to the process, need the hand-holding throughout, and we do exactly that. But first-time sellers are just as in the dark sometimes. So talk to a broker initially, like you suggest. Always talk to a broker. The first thing we will do is try and weigh up your costs. So what's your house worth? How much do you think you'll sell it for? How much mortgage have you got? Then you've got that much equity, plus your savings or anything else. How much of that have you got to spend on estate agents, solicitors, stamp duty? A lot of people forget all these moving costs that you have to pay. So we drill down on exactly how much deposit you've got there. And then we drill down on the mortgage to see exactly how much you can borrow and give you a very accurate idea of the values that you can go out and look at. Unfortunately, so many people don't talk to me first and come to me after they've started looking or after they've actually had an offer accepted. I'm like, well, it's just a little bit too expensive for you. You can't do it. And then there's disappointment. Talk to us right at the very start, the moment you think about selling your house, and we can give you accurate figures for absolutely every part of it. Yeah. And obviously compare the interest rates, all the different banks. We will help with porting that mortgage. So if you need to port, we will do that for you. But we'll also compare the benefit of porting and not paying that early repayment charge against what might be a benefit of changing lenders. Is there enough of a saving on the interest rates to warrant paying that early repayment penalty? We just review the whole situation and make sure you get the best for you in your personal deal.
Yeah, personal circumstances. It's 100%.
Absolutely.
100%.
And everybody is different, literally everybody.
Yeah, no, absolutely. Luke's coming with a question. Limited company versus personal name buy-to-let. I'm seeing the next tax raid on limited companies, so reverting back to personal name. Thoughts?
Limited company buy-to-lets have been a really hot topic. They've been very popular in the last few years. I'm not sure they're here to last, probably similar to what Luke's alluding to there. Interest rates are much higher, probably starting from sort of 3% on a limited company buy-to-let. Often fees are higher. You've got a limited company, maybe a second limited company to the one you trade through. So you've got a whole second set of accounting fees to pay for. Solicitors' charges are higher. You've got all those extra costs to outweigh against a saving in your income tax, some tax breaks there. Again, something you need to talk to your accountant about as well. But I think you need to have quite a lot of properties, be quite a large property investor to make those extra costs worthwhile paying to warrant those tax breaks. Personally, I think my line of thought is if you've got up to 3, do it in your personal name. Over 3, it's something you need to seriously consider. I wouldn't just automatically say one or the other.
Yeah, Joe, I completely agree with you on that, because my accountant said, look, no, keep all your properties in your personal name at the moment, because I don't have loads, I don't have a big portfolio, so it was a better option for me financially. So interesting. Cool. All right. Well, look, thank you very much for joining us on the monthly mortgage update. We'll be back on the last Friday of every month to give a roundup of what is going on in the mortgage market, and I'll be joined by Uncle Dave, aka David Howarth. David, any last thoughts or questions?
To be quite honest, Sanjay, I'm just pleased business is still going strong for us all. I think this is going to be an exciting couple of months, and long may it continue. Get the first-time buyers back, get those lower deposits in place for everybody. So I think we've got some busy times ahead and some great opportunities for those looking to move home.
Absolutely. And if you've got any questions whatsoever, make sure you get in touch with me or Dave. We're more than happy to answer and just have a conversation. Actually, just before we finish, I had an open day on Saturday last weekend, and I had 16 buyers through the door of one property. It's a 3-bedroom property around the corner. It was crazy, right? And a lot of those were first-time buyers. And I said to all of these first-time buyers, what's your experience of looking for a home at the moment? Because it's very different to how it was a year, 2, 3, 4, 5 years ago for first-time buyers. And there's a lot of competition out there. And some of them were really uneducated because no agent was willing to tell them what's going on in the market, how busy properties are, how much interest properties are getting, how much the increase in first-time buyer activity is. And just to have that conversation with them, I'm a massive advocate for first-time buyers and first-time sellers. I think they're so important to the market, so important. It's a ripple effect. And it was just nice and refreshing to have those conversations with them, and they really appreciated it too. So,
absolutely. It's definitely hugely important to educate people, isn't it? Give them that insight into what's going on. That's what everybody's asking for. And that's what I have a lot of feedback about how people like the fact that we're able to guide them through the whole process. It's not just about the mortgage, a bit of advice on how solicitors and the stamp duties and estate agency and when do you do this and what time to do that. We try and help everybody out as much as we can. It's not just about getting the best mortgage. It's the whole big picture of buying a house.
100%.
Everyone appreciates it.
No, good. Yeah, right. So if you've got any questions, then please do reach out to us. More than happy to have a conversation. But look, thank you very much for everyone tuning in. Enjoy the rest of your week and enjoy the sunshine more so. See you later. Cheers, Dave.
Cheers.